Hi there, welcome back to a new type of video on the channel. Tonight we are looking at inflation and inflation rates. So we have a lot to talk about here, obviously related to the United States, inflation rates and all that kind of stuff going forwards into the next few weeks, the next few months, and ultimately into 2022, because we have a lot to speak about actually. Obviously look at this article that you can see on your screen. This is coming from money.usnews.com. Basically, US producer inflation heats up in March as prices increase broadly. So this is not good. This is not a good sign. If we do have a quick read down here, we can actually have a quick read and see that the producer price index for final demand jumped by 1% last month as costs increase across the board. So this is really bad. Like 1%, in a month, that would be about 12% over a year. That's a rather large amount, in relation to what we usually do expect. The PPI rose by 0.5% in February. In the 12 months through to March, the PPI surged by 4.2%. That was the biggest year-on-year rise since September 2011. So it's the first time that we've seen something like this for a very long time, and it is quite significant. We're going to read more about this in just a moment, but let's finish off the paragraph that we are currently on. It followed a 2.8% advance in February. So again, things aren't looking great about this data. A lot has happened. And if we look down a bit lower, we can see that good and services prices actually accounted for almost 60% of the increase in PPI last month. Wow, that is insane. 60%, in 1 month. So again, that is obviously the PPI in the 1 month, but we can see 60% of that was accounted from goods prices. So goods prices have obviously been up significantly recently, and that is what we are basically seeing from there. That was the biggest increase that we have seen in these prices since December of 2009, in a similar position to where we were in the previous financial crash. So again, things are really not looking good. This is followed by a 1.4% rise in February. Prices for services shot up by 0.7% after gaining 0.1% in February. So again, prices for services are also heating up very significantly recently as well. So what does this mean? It means that the prices are going up, and this does come after all of this money printing that we have seen continuously. I mean, yes, so much money has been released recently, we already do know this, but at some point we are going to have to, let something happen. This can't go on forever. We are going to see something like hyperinflation. So what's basically trying to go on is that they are definitely trying to do something about this. Prices are going up across the board. That is what we can tell recently. And this is not good news. This is what you could definitely call a bull trap. Because you see, what we have basically seen a lot recently is obviously all this money being pumped into the economy. We got this relief, obviously, for COVID. We've got all these stimulus checks and all that kind of stuff. But obviously that is not necessarily a natural market. It is kind of like, in a way, manipulation. So things aren't necessarily playing out in the way that they should, and the market definitely could be in a position now where it wants to correct. Now obviously, like I have said, all this money is being pumped into the market continuously, whether it's the stock market, the housing market. We can see all of this money in it, but things are going to catch up eventually, unfortunately. Now obviously, what is this going to result in? It may mean that you look at things right now like, oh, obviously it's cheap to get a mortgage, interest rates aren't very high, but obviously we have the other things which are coming now. We've got the inflation rates, and eventually we probably are going to see some interest rates rise as well. On top of this, we are looking at things like, production costs being the same or at least similar, but actually costs to consumers being significantly higher going forwards. Basically, what I'm trying to say is we're hearing about all these issues, whether it's a Suez Canal, obviously that barge being trapped, or all these other factors. They're basically saying that is okay, it's going to be okay, and perhaps it may be okay ultimately, but what we do need to remember is that, if this inflation rate does carry on, are we going to be seeing our wages increase by what? 5, 10, 12%, 15%? Are we going to be seeing that? Probably not. So of course the purchasing power that you will actually have will ultimately be lower. And that means that yes, the money that you have right now, it may be similar, but obviously the amount of things that you can potentially buy for that money going forwards isn't the same that you could buy at the moment. And this is why we definitely could potentially be looking at a bit of a bull trap at the moment, because obviously we are seeing the market now being manipulated to stay in a very bullish way. Obviously the stock market has been going up for so long, the housing market doing pretty well as well, but now we are seeing things like inflation inflation catch up and the cost of goods catch up as well. So we're in a very precarious position at the moment is what I'm trying to say. I just thought I'd make another quick video talking about this because we haven't really discussed things like this on the channel before. I just think it's very interesting to see what does happen at the moment going forwards, and we are going to give you a bit more of an in-depth detailed video in the near future. But the thing that I'm trying to say in this one is that the goods prices are soaring. Obviously the PPI, or at least the Producer Price Index as it is known in its full name, the demand has jumped by 1%. This is insane, and this definitely is a start of something interesting to see. We're seeing things, at a similar rate to where they were back in 2009 when it comes to the increase in the PPI. So that is really interesting. Again, we're going to dive more into this in a future episode, but we are seeing stocks in Wall Street are driving up higher, they're trending higher. The dollar gained against a lot of the other currencies, and actually the US Treasury prices were mostly lower. So again, things in a very interesting position. The question is, how long can this market be sustained? That is the real question. Well, if you want to find out, we're doing a more detailed video on this one, potentially going forwards into the future, if you guys do want to see it. I just thought we'd take a quick moment to look at this news article, or at least a few news articles, talk about the rate of inflation, because this definitely could be huge. This is definitely out of control if we are going to be looking at a final demand for the PPI of about 1% per month, because that definitely could represent around 12% per year, and that is insane. That is really insane. So that's what we've just been speaking about in this very quick video. Again, a more detailed one could be coming out very soon, so make sure to join us for that. Thank you for watching though. I'll see you again very soon. Goodbye.